Do you belong to the 90% of traders who lose 90% of their capital within 90 days? Now chances are this is probably you. And the thing is, you're not stupid, but you're doing the practices that the other 90% are doing, which is exactly why you're lacking the emotional balance in order to withstand losses and also wins. And it's not like I haven't been there. I've been trading for over 5 years, have more than 500k in total funding, a lot of different payouts, I have a professional equity curve, and the list goes on about my accomplishments in trading. But it wasn't always like that. I was using indicators and failing at the markets while also trying to work a job and trying to balance trading with a job. We all know that doesn't work. So in this video, I'll give you a proven strategy that actually works, and it has given me consistent results over years now, and I keep improving it because that is exactly the point. You have to improve and journal your trades, and it gives me consistent months and years for that matter, like this one where I made over $5,000 in just one account. And bear in mind, I have multiple 100k accounts, and if that isn't enough, I will give you my exact blueprint on how I became a profitable trader, so I don't have to go to a regular job and basically do the entire day whatever I want to do. So let's go back why 90% of traders lose 90% of their capital within 90 days. Now you probably may or may not have already heard about the saying, and it is a very common saying because it's actually true. A lot of traders who hop into the market, they expect results. Now these results are very flawed because they are already brainwashed by the industry, and then you will simply fall into this category of different traders who are trying to reach profitability. Now once again, you are not stupid, but chances are you actually know too much, because a lot of these guys, they have gone through the exact same cycle as you. They do exactly the practices of the 90%. So in order to become profitable, you have to do what the other 10% does. In this video, we're also going to talk about what does the 10% of profitable traders actually do. Now bear in mind, traders who consistently for years pull profits out of the markets are even less than 10%. Now the first thing I want to cover is emotions. A lot of you guys think that a win is something good and a loss is something bad, but you have to completely rewire your entire brain of thinking, because a win is not good and not bad, a loss is not good and not bad. Now of course, we are humans, we like to rather win than lose. That is a very human and natural thing to think, but the thing is that you have to see trading in a business sort of perspective, because every single business has also to take a loss. There's no business where you just start off with $0 and you make a lot of money out of it. Every single business loses, but if it is able to generate profit by the end of the day, then your business is profitable. Now look at this simple example. A lot of printer companies actually lose on the printer, so it's just $21, but they make a lot of money from the ink, right? So this is a very big example. You know, they lose on this but profit from this. So my point here is that you have to see the same in trading. When you're taking a loss, that doesn't mean that you're a bad trader and that you don't know enough, because we're also going to talk about that. You actually know enough than you ever would need. And the problem is you just need the right guidance and the right mindset in order to succeed in this, because chances are you already had an edge in the market. You already had some kind of strategy that was already profitable by its own, but you're still not profitable because you're not able to execute perfectly, identify the right market conditions, and so on and so on. Now of course, the market has patterns. If you're not able to identify the patterns correctly that basically happen the same every single day, then you're not able to execute perfectly. You have to find something in the market that happens over and over again. And if you're not able to see the patterns, then you simply don't have enough chart time. Now it's not about knowledge, it's about experience. Experience will always beat knowledge, because experience gives me the ability to recognize the patterns on a daily basis. You know, the charts can be very complicated or they can be very simple. The moment you overcomplicate the things is the moment you're going to screw up, because simplicity is the key to actually profitability and not making it as complicated as possible. Now the 90% of traders are outcome dependent. Now emotions lead to bad trading decisions. We also need to cover why is minority of traders making profits while 90% are still losing on a daily basis. Now there's a lot of different reasons for that. Now first of all, it's overcomplicating the trading space as a whole. As you can see on the chart, this is not something that you want to trade for the rest of your life. Now just think of it. If your chart has ever looked something like this, because I personally, my chart has also been looking like this when I just started out trading. I thought the more lines I have, the better it's going to be. The more indicators I can collect on the chart, the better my profits will be. But it's actually complete opposite. The logic goes like that. The more you try, the more you're going to fail. Now they also try to make different, very complicated risk management approaches. Now risk management is the easiest part of trading. There's only 3 pillars. There's risk management, psychology, and strategy. If you master these 3, I guarantee you that you'll become profitable and have an edge on the market. That is what separates the profitable trader from an unprofitable trader. Now look, risk management as a whole, as I said, is the easiest part in trading. Look, you can have a high risk reward, but your win rate has to be low. If you want to have a high win rate, then your risk reward has to be low. So it doesn't go that you have a high risk reward and also high win rate. That does not work. You're doing a high risk reward, but you're wondering why your win rate is still so low. And we, as low risk reward traders, do the complete opposite. We focus on having a high win rate. That is how I was able to have a 30+ win streak. I haven't lost in over 3 months. And that's exactly what we do in this way of trading. So we're not trying to do what the mass is doing. We're trying to do something that not everybody is doing. Now this falls once again onto the 90% of traders, because this represents the entire 90% of traders who are still unprofitable. And this could be you if you just put in the work and actually be open-minded to another way of trading. Because once again, if you do exactly what all of the 90% is doing, then you will just fall into that category and not be profitable. So you have to do something that is not regular in order to be unregular. So instead of focusing on having a high risk to reward, I focus on having a high win rate, even if that means that my gain per trade is not as much. But since the win rate is so high, you still end up in a net profit. That is the only thing that matters in trading. As long as you're able to pull out profits out of the markets consistently for months and years, that's all that matters. It doesn't matter what you're trading. Now, how does the strategy work? I'll quickly introduce it to you. I'm looking out for easy draws on liquidity where the market will go back, and I target those draws on liquidity as my take profits. Now, the stop losses are a whole nother thing that we need to discuss in another video, because although it's very simple, it has to be recognized, and this falls back into what I have said earlier. If you're not able to recognize the patterns, it doesn't matter how much of my strategy I share to you, you have to be able to recognize yourself, because only that way you'll be able to trade yourself. Now, very simple draws on liquidity are when we have two swing highs that are basically confirmed relative equal highs, and relative equal highs are very strong magnets onto the upside. Therefore, we're just trading them as our TP. And as you can see, the trade right away just went lower. So you can already see what we do in this type of trading is very different from the masses. Now you might be thinking, how is this way of trading profitable? Why are you focusing on having a high win rate and not a high risk reward? Because it allows me to firstly compound my profits way easier. But the next thing is also, I simply like to win a lot of the times. Now there's another thing that a lot of you guys don't understand. Your strategy has to match your psychology. If you are able to withstand 2 or 3 months of drawdown, but you'll be okay to be in profit by the end of the year, then another strategy might be more suitable for you. But for me personally, I like to have gains every single month. I want every single month to be green, while I don't focus on having a green month, because I'm also able to accept that 1 month or 2 months will not be in profit. I like to simply have it that way, that most likely the month will end up in a profit. A very typical argument is that when you lose a trade, you basically blow the entire account, which is not the case. When we lose, we don't blow the entire account because we're risking the same amount that a high risk reward trader would also risk, which is 1% typically. Now on a personal account, you can risk more because the entire capital is yours, unlike prop firms where the entire capital is just simulated and it's just numbers on the screen. It's not even real money. So we as low risk reward traders are anything like the typical trader. We have found something that actually works, and we think that simplicity is the key to success. Now simplicity makes it easier to trade, easier psychology, easier strategy, and easier profits. When you're making it very complicated, it becomes extremely hard to take the trade, because you have 100 different check marks that you have to check in order to get into a trade. Now look, we as humans, we are not robots. We only have a certain amount of energy each day. So that also means that if you're concentrating on 100 different things in order to take a trade, then most likely your psychology will end up losing. Now your strategy might be able to pull out profits consistently, but if your psychology is lacking, then your strategy also doesn't work, because they go hand in hand. But if you're keeping it simple, you'll make easier profits out of the market, because that is the only thing that drives success, not even in trading, but in every type of business. I have shown it to you previously with the printer. They lose money on the printer, but make profit out of the ink. Now there's a big discussion going on whether or not you should trade a high risk to reward, a low risk to reward, high win rate, low win rate, doesn't matter. As I said, you have to treat trading like a business, and the goal of a business is only to pull out profits by the end of the year, month, whatever it is. Now trading as a whole comes with a big responsibility, Now you already have given the opportunity to just sit at home, make a lot of money with having a lot of time. Now look, you are not patient enough as well, because trading has already given you the opportunity to basically do whatever you want the entire day, and yet you're still not able to execute perfectly. I have two graphs for you prepared, and both of them represent a different type of trader. Now first of all, the one that is just consolidating over and over again, he believes that all of these traders are actually profitable ones. Now I can guarantee you with certainty, none of these traders that are here on the screen are profitable, let alone call them traders. They are YouTubers who have mastered the marketing side of things. There's maybe a handful of traders on YouTube who are actually profitable, who have certificates they can show you. Now another thing about certificates, because I have a lot of them as well. Here's the thing, if the YouTuber is very big, then most likely his certificates are paid. So this is not even his real accomplishment. So the certificates are not even real. They're just promoting the platform, and as an exchange they're getting these fake payouts and even just additional money for marketing and promoting the entire stuff. So this is another thing, if the YouTuber is very big, most likely he's not making profits out of trading, but just out of doing promotions, marketing, ads, whatever it is. So the only thing that cannot be faked is a proven track record. That's where I record most of my trades in my Discord, and if you want to learn more, the link is in the description down below. Now we have a lot to cover in this video. Now another very common and typical thing for a unprofitable trader to do, so basically the 90% of traders, they are strategy hopping. Now strategy hopping is another topic in itself, because you have to look at it this way. A trader, so basically you, finds a strategy, back tests it for X amount of time, expects the holy grail. You know, this has all happened to us, even to me as well. When I was looking at a strategy on YouTube, I thought that I'll become rich out of this simple strategy 5 minutes a day, but the reality is you have to put in the work. Now the next thing is he goes into drawdown when back testing, and he thinks that this strategy doesn't work. Now chances are the strategy did actually not work, because most of the guys on YouTube, as I have told you previously, they are not profitable themselves, and they're not able to execute perfectly in the market, which is exactly why the strategy doesn't even work to begin with. Now, and if I'm making a claim, I'm able to back it off, go back into the charts and try to backtest my strategy, because it actually works. But we'll talk about my strategy a little bit later in the video. So actually you know more than you need. There's not much more that you can learn. Chances are most of you watching have already been in the markets for years or at least months now. Now look, trading, as I said, is very simple. You have to backtest, journal, and repeat that over and over again until you have an edge in the market and you're confident enough. So you don't need more knowledge, you actually need more guidance. Now this is another big claim. Effort equals to success, but that is not the case. If that would be the truth, then all of these hardworking men would actually be millionaires right now, and everybody who's not able to do the same will be poor. But unfortunately that is not the reality. If effort would equal to success, your dad would be rich. Now of course I don't know much about the personal life of you who is watching the video, but chances are your dad might or might not be a very hardworking man. And once again, if effort would equal to success, you guys will be rich. And if your dad has not been in your life, then I'm sorry for that. Now like, success only equals to effort if you do the right things. Now once again, that does not mean that these working men are not doing the right things, but it has a way different purpose. The purpose of these men is basically to pump out the oil. Now here's the thing, they are making money for the guy that the company belongs to. So each individual person has their unique goal. So it doesn't mean that these guys are just less worth, but in fact trading is not worth that much. If you think about it, it does not much to the world. Does not do anything. The only thing that it does is provide us with time, money, and freedom. So you've been given this opportunity, but you're still not able to actually be motivated, let alone have discipline. Now here's another thing, motivation is not enough. First of all, you need to have the willingness and desire to become a profitable trader. Whether you want to become a profitable trader, and this goes for anything in life, whether you want to become a professional trader, a professional athlete, whatever it is, a business owner, you name it. It all starts with having the willingness and desire for having that car, that house, whatever it might be. You know, this motivates you, but motivation isn't enough. Discipline is only enough. Motivation is a very unpredictable and non-consistent push of inspiration, and it lacks the fundamentals on building something that is actually great and that you can build on. Now, motivation is also very short-lived. When you're just waking up, you'll be thinking, man, I'll just backtest the entire day. And you might actually even backtest the entire day, and that is still not enough, because the next day when you wake up, you're not doing the exact same thing. So consistency is always better than motivation. Now bear in mind, having a little bit of motivation is never bad, because especially initially, that first motivational push will actually help you to get that consistency. But that is exactly what separates the successful trader and the successful person as a whole from the one that is not successful. Now discipline on the other hand ensures that we have a proven track record and consistency to look back to. When you're journaling and doing all of the things every single day, you have something that you can look back to. But if you're just doing it the other day, today I'm backtesting, today I'm not, tomorrow I might, and this goes on, then you don't really have a proven track record of actually doing the right things in order to succeed. I've just told you, you have to do the right things in order to succeed. If you're just working hard, that is not enough. And this is one of my favorite quotes: the magic resides in the work you don't want to do. So just get yourself up and actually do it. Now the next thing is you're looking for consistency in the markets. Now this is another big topic. The markets are already consistent enough, but you as a trader are not consistent enough. You are not doing the right things in order to be successful. So a lot of you guys think that I want to be consistent in the markets. Replace the word market with the word myself. So instead of I want to be consistent in the markets, I want to be consistent in myself. If you're not consistent yourself, how can you expect the markets to be consistent? Because it's about pattern recognition. So the market is only consistent to the amount that you're willing to let yourself be consistent. So once again, the patterns repeat every single day. The market is actually very predictable, and it's also very consistent. The same things happen over and over again. Now, of course, you cannot be right every single time and every single day, but the markets repeat the same thing every single day. So it's not that you want to look for consistency in the markets. So the markets are consistent enough, but you are not consistent enough. Now, here's another thing. You have to think of goals in a way different way. Let's just assume that we have a bug problem in our house. We want to remove the bugs. Now you have a couple of different options. You can buy a bug removal spray, bug traps, clean the house, use natural repellents, use moisture, professional pest control. Now all of these, probably the professional pest control will be the most secure. Now we're not talking about the consequences or the money you would have to spend in order to remove that one single bug. There have to be sacrifices made in order to be profitable or successful as a whole in life. These options are not bad, but they still leave room for the bugs to survive, plant eggs, and then their offspring is going to give you the same headache as their parents. So we need a way to make it absolutely impossible for any bug to survive, even if we have to take sacrifices. So you have to do something that makes success inevitable. Which brings us to part 2. If you just nuke your entire house, it's impossible for the bug to survive. And now you might be, this is very extreme, and this is actually very extreme. Of course, you would never nuke your entire house, but my point is that you have to do something that makes success inevitable. If you're doing exactly what you have to do every single day, then success becomes inevitable. It's impossible to not be successful. Now, once again, this is a very extreme example. We're not going to nuke our entire house, but in order to make it impossible for the bugs to survive, we'll do that, because the bugs can't survive nuclear bombs. Normal bugs in a house, goal achieved. Now there's another thing. How bad do you actually want it? Because if you don't want it bad enough, then you're not going to sacrifice your entire house. Now, of course, in this example, I don't want it as bad to remove the bugs, to nuke my entire house. Do I want trading enough to sacrifice sleep, energy, money, time, whatever it is? Yes, because I'm absolutely going to sacrifice all of these things, because I know that in the end, this will all be paid back. I will have all of the time back, all of the energy, and all of the money, and whatever it is, because trading is just that worth it. So if you are sure that you really want to have it bad enough, if you do the inevitable, you see results, and success becomes inevitable. It becomes impossible to not succeed in something. Now on to my strategy a little bit further. I have previously told you that simplicity is the key to success. The more simple the things are, the more success you're going to see in your way of trading. Now guys, you can have the best strategy, the best risk management, and also be a master at psychology, but every professional trader needs a professional journal. That's why I personally use TradeLens. Now if you want a 10% discount, it's the second link in the description. Now first of all, I've told you earlier that I like to look out for easy draws on liquidity, and this works on every single time frame. Now currently we are in the weekly time frame, and it works very well because the high time frame is usually more reliable than 1 minute, for example. The 1 minute is full of noise, and you mostly want to avoid it as a beginner trader. So the easy draws on liquidity are very easy identified by having two swing highs. So once again, I like to look out for easy draws on liquidity. We have a swing high in here, we have another in here. If we have two swing highs being relatively equal close to each other, then those are relative equal highs. Relative equal highs are very strong magnets on to the upside. The market likes to revisit those kind of places because for a lot of people, a lot of liquidity resides up there, or just in general, it's a pattern that reoccurs every single day on almost every single time frame and just works. Now, of course, it's not going to happen on the weekly every single day, but you get my point. So this is the very first confluence, having the relative equal highs. So this is the first confluence that we have, which is the relative equal high. But another thing is also, if you just look at candles themselves, look at the entire candle behavior. I want you to focus on this candle that we have right in the present, right? I want you to focus on the most recent candle. Now look, we have a push higher, took out the previous week high, and the momentum is very bullish. The way I know that is because the body is just very big. So what is more likely to happen? Will we reach for the previous week high when the next candle is about to open? Or will we go all the way lower for the previous week low? Of course, we will go for the high, simply because we're already so close to it. The candle will look something like this. We have a wick to the downside, which is also suggesting to make sure that we're not creating an FEG in here, because usually we don't like to create FEGs on a weekly chart. From here on, the entire body will start and we'll take out this high and create another wick onto the upside. This is basically how the entire candle will look like. So by having these two things, we already have our drawn liquidity and we know that we will go onto the upside. So you can see this way of trading is extremely simple. This is basically what I do on a daily basis. That was very complicated when you read the title of this video. I have to disappoint you because it's the complete opposite. This is very simple and it works, most importantly. When you are trading for multiple years now and you're not a beginner trader, then chances are you know so much that it's actually hurting you. But let's look at the beginner trader. Let's look at yourself when you just started out trading. When you were a beginner trader, you weren't brainwashed and therefore you kept it very simple. As a beginner trader, you have no other choice than keep it simple. Now think about it this way. How do I make the things as complicated as possible? Only by having a lot of knowledge to begin with. If you don't have a lot of knowledge, you'll keep it very simple because you don't even have all of the tools, all of the different concepts to apply to the market. So in fact, when you were a beginner trader, you were closer to your goal than you are right now. So once again, you have to make it more simple in order to be successful. When you started out trading, you were much closer to your goal, becoming a profitable trader. So based on his little amount of knowledge, he's able to actually make profits out of the markets because he's not tied to the entire brainwashed industry. He only focuses what he has already learned and he tries to apply that onto the charts. Now the strategy that I have given you previously is already very powerful, but if you don't implement the rules that belong to my strategy, then the strategy will not work. So you have to identify the rules and write them down in order to be profitable with my strategy. It's very straightforward. No NFP days. First 3 days of the month is also not going to be a trade, and I'm also not trading on bank holidays simply because I lose a lot of the times on these days. So why should I trade them to begin with? I know that I'm going to lose. The chances are against me. Now a lot of people say that trading is a probabilities game. We're going to talk about that in a second, but since I know the probabilities are lower on those days, why should I trade those days to begin with? Now a very common saying is trading is a probabilities game. Now, unlike a coin, trading is actually not a probabilities game. Let's look at a coin flip. It has two chances, either on the top or the bottom. So the chances of hitting each side is 50-50. Now trading is completely different. The reason for that is because the market has uptrends, consolidations and downtrends. So therefore, the probabilities are not always 50-50. Although the market can only go up or down, we still have phases, we have structure, we have patterns, we have a bunch of stuff that we have to look in for in order to make a decision. And we have a lot of factors that drives the probabilities. That's where we're only trading in the best conditions, because no strategy works in consolidations, in uptrends and also in downtrends. That does not work. There will always be a kind of phase and maybe even a subgenre of all of these that will be even better for your way of trading. Now personally, we focus on consolidation phases because it's very easy to win with a low risk reward, even if you're not even right on the entire direction of the market. Now you might be wondering, why is there an AK? Basically what you are trying to do with downtrends and uptrends, so basically trending markets as a whole, you're trying to hold an AK with one hand and trying to control the spray. Now obviously you cannot hold an AK-47 with one hand. It's not going to be possible to aim with that properly, but that is basically what you're trying to do. You're looking for volatility, the most recent price action, the hardest move onto the upside, the biggest dump, but that is the complete opposite of what you have to do in trading. What you're looking is for dopamine, but what these guys too have proven a system behind their trades. They are not looking for dopamine hits, they're not looking for something exciting, they're just looking out for something boring. And trading needs to become to a point where it's actually very boring. So you're not even learning something new, you're doing the same over and over again. So trading for me is not even a thing that I even like to do or gets me excited. Now, of course, I like the results of trading because it gives me freedom and money once again, but I don't really care about the entire price action. I only care about making money because that is giving me the things I want in life. So I just go into the chart, basically do the same every single day. We have taken out sell side liquidity. We have relative equal highs onto the upside. So what is going to be the next thing that's going to happen? We'll go onto the upside. This is a textbook example trade. Now, a lot of you guys say, why are you looking out for textbook examples? Because if I start to make the things very complicated, because there's also, even in my strategy, which is already very simple, there's also exceptions. We have to trade for a little bit longer in order to identify the correct trading decision. That's why I'm showing the most easiest trades that you can also follow along. Now, once again, we have relative equal highs. Took out the sell side liquidity. Our stop loss placement has to be somewhere logical where we can identify if the price goes all the way lower in here, then we are just simply wrong on the entire trade. Now, once again, we're not going to blow the entire house or account with this single trade. We're just going to lose 1%. So after having an entire framework, it's not just that I have gone to the 1 hour chart, look for relative equal highs, sell side liquidity being taken out. I have previously looked out for the previous week high. So I know that we will go on to the upside. You need to have an entire framework and not just trade randomly onto the chart, guys. So what's the next thing that's going to happen? We get filled and straight up to the upside. Now, here's the thing. You don't have to take this exactly at this price. You can take it anywhere in the moment. Of course, that will give you a low risk reward, therefore less profits, but we're looking out for consistency and also a very high win rate. If your win rate is extremely high, then you should be okay with also taking lower risk rewards as a whole. So what you need to do in trading is doing the same thing over and over again. Do you think that I'm really excited about this? I've seen it 1,000 times and I'll see it another 1,000 times and I'll still not get excited about this. I know, but it wasn't always like that. I was not always pulling out consistent profits out of the markets because there has also been phases, as I have shown you in the very beginning of this video, that it hasn't always been sugarcoating for me. Now, you may or may not know all of these, or maybe at least just one of these guys. You know, Ronaldo, Conor McGregor, and also Michael Jordan. All of these guys have something in common. Now, they're not traders, of course. They had a strategy in order to succeed. They didn't become this popular and also this good at what they're doing just by looking at the screen all day and doing anything what they want. They had to adapt. And it also wasn't always easy for them. So they had to adjust their strategy if they saw that it's not working. And you have to do the same. And not even with your entire trading strategy as a whole, but in your way of thinking. When your way of thinking does not work, you should change it up. Think about it differently because the perspectives that you have in your mind is not the correct one. Think about what we have talked about previously. If you do the absolute necessary, then success becomes inevitable. Now, here's the thing. How do you find an edge in the market? You need chart experience. How do you get chart experience? By observing live trades, backtesting, and journaling. Now, we have two different traders, person A and person B. Person A is observing live charts, backtesting, and journaling, which is an average of 3 days. And the other guy is just playing games, occasionally looks at the charts, doesn't even take it serious, 1 hour a day. You might say that 3 hours a day is not enough, because we have just talked about that you have to do the absolute inevitable in order to become successful in trading. But 3 hours a day goes a very long way, because just out of experience, I know that you don't really have enough time in the markets in order to succeed, because you're working a regular job while also trying to learn trading. This is exactly why 3 hours a day will go a very long way. Now, a guy that is consistently doing 3 hours a day for an entire year, he'll have more than 1,000 hours onto the charts just doing that exact same thing. Think about it, the athletes that I've shown you previously, they have done one thing and one thing only. That's how they became so good at it. But person B has barely even 400. So who's more likely to be successful? Of course, it's going to be person A. Now, why does this matter? Because you have to train your eyes to actually identify all of the different patterns correctly. If you're watching for this long, I can already guarantee you that you will become a profitable trader, because 90% of people already skipped on to the end of this video or just didn't watch it at all. But since you had the patience, the actual determination on how to learn the things that I'm teaching in this video, I know that you will become a profitable trader. So unlike the 90% of traders who have already skipped the entire video, you have watched until the end, which is proof that you'll become profitable. In order to become profitable, you need an edge, which is basically an inefficiency in the market. Now look at the inefficiency in the market this way. If everybody is taking the same highway, but then you're the outlier who's taking the shortcut, then you're going to be faster than 90% of people who are taking the shortcut. Now here's a little problem. If everybody starts to take that little shortcut, that shortcut will become inefficient, and therefore it will not be faster, and you might as well just take the regular one, which is why my strategy is is limited to a set amount of people. My strategy is only given out to the people in my mentorship, because once again, if I share it with too many people, it becomes inefficient and therefore we all will be not able to make profits. Now, if the first link in the description is still working, then my mentorship is still open. Now here's the thing, I have more than 5 years of experience, more than 500k in total funding, and I'm also funded with multiple prop firms. I have been interviewed by Funding Pips, basically the biggest prop firm in our industry currently, where I basically explained the entire gains that I've made and how I was able to pull all of this off. I have a 95% win rate, and my mentorship will give you the absolute necessary things in order to become profitable. No nonsense, no noise, it is just the things and the necessary things that you need to learn in order to become profitable. So I know that you will become profitable because you have made it this far into the video. And you might as well just like the video, subscribe to the channel, and comment down below what the most valuable lesson you'll learn today was. Thank you guys for watching. See you guys next one.